Welcome back, everyone. Thanks for tuning in. Here's the update for August the 9th. It's Friday. Got out of work, got home, looked at my portfolio, and I think we're missing everything. We're missing all of the money. We are down significantly in the portfolio. Year to date, let me see here. We're looking at SLV. 15.47% year to date. It's still outpacing the S&P. The S&P is at 1268. It took a massive hit. Looks like we bought down in the dips, and now it's starting to trend back up. We'll see how long it takes to get back up to the point that we fell from. Silver spot price is up $3.65 year to date at a 15.2% return year to date. It's downtrending. It got down as low as 26, I believe. Now, SLV is at 25 and silver spot price is at 27. So this is going to be interesting. In my experience, it looks like it tracks that. So SLV moves before and then silver spot price kind of follows. So it's at 25, it's at 27. It looks like it might be going down in the coming months. So we'll keep an eye on this. I looked at my portfolio and read all day long. This sucks, you guys, really bad. It looks like I got the worst timing ever. Again, if you've been paying attention to the first videos, we were up almost $200, and now we're down $269.69 from the total portfolio value. Now, of that $269.69, 63% of it is a loss on my end on my 4 positions that were in there prior, and then the rest is from the silver mining stocks. So we're going to be looking to average down our positions because this is horrible. But the thing is that when you look at the 52-week lows, they're not close to the actual share price right now. So that means that more red is coming if we continue to trend this way. So moving forward, I want to get in, and I want to, because this portfolio was down over 300 just a couple of days ago. I was checking in on it throughout the week, and I wanted to average down. But guys, I don't have any more money to average down. So talking about buying the dip and going and not having enough money to buy the real dip, the dip after the dip that dips. But it is what it is. We're going to have to wait this out. I'm getting money probably by next week sometime, and we're going to see what these prices look like then to see if we're going to average down in some of these positions. Now, there is 2 positions that I am going to average down in, and that is the lithium mining stocks that I have. There's 2 of them. One's Arcadium and one's Lithium America Argentine. Those 2 I'm going to continue to buy heavily moving forward, and the reason why is because that was following money. So Sprot's portfolio had both of these in there. A lot of the big hedge funds bought these, and they bought significant amounts. Normally, hedge funds buy everything, and you'll see them in the, out of their portfolio, they probably have 5 to 6,000 companies in their portfolio. These were kind of heavy. They were in the top 1,000. So that's pretty significant when you talk about $1.2 trillion of money that's floating around in some of these hedge funds. So we're going to continue to average down on those 2 as much as we can. And they've taken a big hit. Lithium Americas is my biggest loser. It's down over $1, and I've lost $104. Now, we talked about this going in. The reason why we buy heavy is because if it moves $1, we make $100. So that's the reason why I bought heavy, and I got the 100 shares. Now this works in the opposite direction as well, and now it's down $100. So if we look percentage-wise, it's taken a 30% hit. To return, to get profit, it's quite rare. It's like hitting blackjack that this company is going to take off and go in reverse. But again, we're going to keep averaging down as much as we can to get that price as low as we can, and then hope for some kind of bull run to happen. So that's all I wanted to share today. We're down significantly in the mining stocks. It looks like I have horrible timing, but we can't time the market anyways. We're going to continue to move forward. Thank God for Veralto. That's holding me up. Again, I got into that position because of large money moving into their position. And I'm also looking at Flute, which is a gambling share company. Company that has their share on. It's called FLUT. The hedge funds got really big into that one as well, and I'm going to be looking for an entrance right now. I think it actually trades below the price that they bought it at. So again, Veralto, I got below the price that they got it in, and then the lithium stocks, I'm going to continue to buy down or average down my share price until I get into the hundreds of shares, if not thousands. We'll see, because right now to get this $2, so let's take lithium Argentine, for example. I bought in at $3.44. It's at $2.39. To get that $3.44 down to $2.40, say, and I own 100 shares, I would have to probably buy 500 more shares to get it down that far. So it's crazy, and it's so hard to average your costs down. But when you do have the chance and you are going to keep the company long term, just pour everything you can into it to get that price down, because 2-3 years from now it might flip and it go the opposite way if the company is doing well. So you guys already know that. I don't need to share that. Thanks for tuning in. Thanks for the update. Leave your comments down below, and I'll get to them when I can. Happy blessings. Happy stacking.